Hello. Okay, greetings to fellow traders. Uh, Thank you for coming into this session. Um, Today we are going to talk about trading on precise trading zones. Okay, the market which mainly we focus is about 38 crosses. Okay, what we will be doing is, okay, maybe I can show you the screen. So what we'll be doing is we'll be looking at trading on live trade, provided there is a signal. If there isn't any signals, then we can use the session to discuss on the crosses. Okay, whatever you have doubts you have, we can help you to discuss on this, and so that we can take uh, uh, trading decisions on the crosses. Let me show you the screen. Okay, in fact, if you notice this screen, the market looks pretty quiet from yesterday's session. Okay, one of the reason being is the RBA rate announcement is out another half an hour or so. And of course, market is expecting about quarter percent hike. So as a result, you can expect the Aussie to be moving after that rate announcement. So till then, I think the market would be pretty quiet. So at the same time, I will also tell you what are the potential trades to look at, or viable trades. Okay, the instruments which we focus are mainly all these crosses: Euro USD, Pound USD, USD CHF, dollar yen, USD Canadian, Aussie, New Zealand, Sing dollars, and the crosses against each other. So if you have any doubts based on any one of these crosses, I suggest you can type, and will help you to discuss on that crosses. And also do specify the time frame, because see what we do is, because we want to be precise on our analysis, because because sometimes like you will be looking at a very long term, and when you take your trade decisions, in fact most of the traders, they go wrong, because they do not pay attention to the time. Meaning sometimes they look at a report, what is the euro to be expected, but they are day traders. So if you're a day trader, if you feel that the euro is going to hit like 135 for example, and right now is only 139, so you have about 400 pips. And especially if you are a day trader, I don't think it is wise enough to have that in mind, that figure, and take your trading decisions accordingly, right? And in fact, we also believe that the euro may have bottomed, because yesterday, I think, if you notice on the screen, yesterday's low was 138.50. So what we are expecting is 138.50 is our first level of target, which is already hit. Worst scenario, we are expecting about 137.40, right? So 137.40, that's the level. If you feel that, if you really see that level, then chances are, it might be a viable trade for a long. So, but right now, as it is still not very clear. Okay, I can show you the chart. Maybe we can discuss on this instrument, and later on, I can tell you some of the viable trades which we look at, because as it is, the market is pretty quiet now. So if you look at it, this is the 2-hour chart which we are looking at on the Euro USD. So right now, in fact, the price has, I'll show you the candlestick chart. Okay. So, the chances are, it may have bottomed, right? So as long as, this level, which is, 138.50, which, it made, yesterday, holds, and, if this high, in fact, 139.65 is the figure which we are looking at. If the price gives way to 139.65, then we can be pretty sure that the euro has already bottomed, meaning on the hourly chart, right? So this is a 2-hour chart which we are looking at. So when that happens, what happens is you can expect the price to rally for at least a couple of hours, or even 1 to 2 days, right? So right now at this junction is not very clear. So we'll wait for the market to give us a signal. So while we are waiting, what I would suggest is, maybe we will go through that report, because this is the time you can also use it to learn how to use our report. Just give me a minute. Okay, this is how our report looks. In fact, our report is published before 6 GMT. In fact, 5:30 to 6 GMT. Okay, our report is quite unique, and what happens is, it only contains numbers. So we pay a lot of attention to price levels, right? So I'll just go through one example. In fact, this Euro USD which we are looking at, in fact, the report is ready. So we'll just look at this example. In the meantime, if you have any questions, please type it out so I can answer your questions towards the end of the session. Okay, you start off the day by looking at the correct report, and in fact, we look at the previous close, which is the US closing price which we are looking at. So this price is 139.30. In fact, what we do is we use this level as a benchmark to decide whether to be a buyer or seller, or whether the market is bullish or bearish today, right? So in fact, the market is trading at 139.10 at that right now. So it is just it's pretty flat, right? So and the trend wise, we do have three different time frames. Okay, in fact, what most of our traders using our report do is we have three different types of traders. The report is used by scalpers, intraday traders, short-term traders, even long-term traders. So this hourly is sideways while 138.50 holds. So basically what it means is, as long as the price doesn't go below 138.50, the market is expected to be sideways. When it says sideways, you can expect the market to be pretty choppy. So, in other words, when you look at, especially if you are a intraday trader or scalper, you should be looking to long near this levels, because see, what is so special about our report is our levels works quite nicely, because we use different tools to get these numbers, right? And the next the daily is corrective down while 141.40 holds. The word corrective down, what it means is it is towards that end of that down move. See, because I think if you notice, the euro has been coming down from, if I'm not mistaken, it's about 145, 70, 80 level, So it's all the way, it's about 600 pips down. So this is what it's telling us. The daily trend is approaching towards the end of that phase. That's what it meant by corrective down. And the weekly is also corrective down while 147.70 holds. So in other words, both the higher time frames, what are they saying is this down move, okay, which has been happening for quite some time, it is going to be pretty limited, meaning in the sense, it is approaching towards the end of that down move. So especially the bears, if you are a bearish, then what I suggest is, you have to be very cautious. When I meant cautious, what I mean is try to be very nimble and book your profit as soon as you get it, because the market is expected to turn up. So this is what you need. Then after that, what you do is, you have an economic calendar. We also tell most of our clients not to trade during data announcement, especially if you are a intraday traders or a scalper. But if you are long-term or short-term traders, then you can hold your position during the data announcement, or you can even trade. It's up to you, because trading is a game is played by different sportsmen, meaning in the sense, you have a risk appetite, right? So after that, we have a page 2. Okay, this is where, it's got a lot of words, and whereby you can use it to decide what is to be expected or what to be look forward to. This market summary, this is what has happened from our report the day before. Euro USD closed at 139.30, which was above the open and was within prior day's trading range. The high was 15 pips from Precise Traders hourly level, and the low was 15 pips from Precise Traders support zone 1. So this is all maybe history, because this is what has happened yesterday. The information you need to pay attention are the trend, daily patterns, and today's strategies. So the trend wise, the hourly oscillators are turning bullish, right? And the price is below the moving average, so the bears have to be cautious. So what we are saying is, if you are bearish, you have to be cautious, meaning you have to start booking your profit, or you reduce your levels, reduce your positions, So the hourly trend is sideways while 138.50 holds, and the daily trend is corrective down while 141.40 holds. So expect the price to make lower lows, but the downside may be limited. So again, we are reminding you, saying that, okay, the price is approaching towards that lower end. So please be extra cautious. And we have this daily levels. Okay, these levels are mainly used as a boundaries for the day, right? So in other words, like the high and low for the day, you can expect to have in any one of these levels. So the high is, 140.25, 140.90, and 141.90. These are the levels whereby you can use it for a quick trading entries, right? And the low wise, 138.50, 138 figure, or even 137.25. In fact, that is the level, towards we are looking for the euro to bottom soon. And in other words, also, do take note that whatever the levels which we are mentioning here, you please use plus minus 5 pips because of the spreads, because different brokerage firm will use a different spread. So especially when you want to put a stop loss, I suggest you have a variance of about 5 plus minus 5 pips. The patterns, this is the most important section in this section, in fact, the patterns and today's strategies. So this patterns is the daily trend had a rally but was within prior days, prior trading range. The hourly trend has been in a range trading with a limited downside. Again, we are saying, the downside can be limited. So 138.75 and 138.50 are the critical levels to watch to maintain the bullish outlook. So what we are saying is, if we feel that the market has already bottomed, right? Chances are, this levels, that means the price should not see hitting this levels, right? On the 5-minute is along the gradual up channel, and the price patterns are suggesting the price may have bottomed, but it should not trade below 138.75 and 50 levels, and 139.65 should give way to support our statement. So what we are saying, in clear picture, what we are saying is the price should not trade below 138.75 or 50, and the price should start to break the high. That means if the price should break above that 139.65, then we can be pretty sure that the price has bottomed and you expect the price to rally or move up at least for the next couple of hours. The opening price principle suggests no clear directions, but the bears have to be cautious. So again, we are warning you, saying that, overall is the message is pretty clear. What we are saying is, if you are bearish, okay, try to book your profit. Of course, you can have another 100 pips lower, but we are warning you because, the price is about to turn. So, and if you're bullish, then what we are saying is, please try to stay put, get ready to enter the market once the market gives a signal. And this bulls, we have this levels. In fact, most of the traders use these levels for entry or stop loss, because this can be quite precise and quite accurate on entries levels. So if you are bullish, 138.70, 138.20 or 137.85, these are the levels you can use to take entries or take trade. So right now it's trading at 139.12, which is about 40 to 42 pips down, right? So what I would suggest is, unless if you feel that you do not mind taking that risk, then you can take the trade. Otherwise, wait for the market to come down. Sometimes what happens is, the price may not appear at that level, but I think, when you trade on levels, your confidence level will get better and better, because, the price has to reverse in this level. So, chances are you would not make mistakes and your emotions would be at bay. And again, if you are bearish, then 139.65, 140.10 and 140.75. These are the levels you pay attention to short, or if you're long, then this is the level you can plan to book your profits. And today's strategies, conservative traders, has to be sidelined, because we are in a 50-50, because we are not sure whether the market has already reversed, or chances are it might have a one more down move and that's it. So we are telling, so conservative, if you're conservative, then either you stay sidelined or strictly trade at precise traders report levels. Aggressive traders, you have to long at the break. Okay, the two ways which you can look to trade. Of course, this is the trading tips which we are giving, meaning in the sense, long at the break of 139.65 with a tight stop, with about 50 pips profit target. So most of the signals which we mentioned here is you use your stop loss of about 30-35 pips, and your profit target has to be about 35 to 50 pips. So the ratio is about 1:1. Or you can also look to long near this levels, because that would be one of the least risk for you to take trades. So after you have read this, so more or less you know what is to be like expected and what is to be look forward to. So the next is you start up the day, because our reports are published in fact before 6 GMT, and we have one more update for the US session. So what is happening right now is the euro is trading at 139.12. So whenever the price is trading within our zone, we call it a no man's zone, support zone 1 and resistance zone 1. Right now the price is trading at within the no man's zone. If you are conservative traders, then what I would suggest is probably you wait for the price to break higher, then you take, because especially if you are being very narrow on your stop loss, chances are whenever the price moves within this no man's zone, the price is quite choppy, and chances are you might be stopped out. Unless you use a bigger stop loss, then you can trade within this zone. It's up to you to decide. So here then if you recall, I think early on I said that 139.65 is the level to watch, right? So if the price breaks 139.65, which is our resistance zone 1, chances are the price is going to go higher, alright? So if I'm going to long at 139.65, where do I book my profit, or where is the level which I pay attention to, is where I have resistance target 1, which is 139.85, and we have a target 2, which is 140.50, and a target 3, which is 141.15. So in other words, if you buy or long at 139.65, you should know that there is a immediate resistance, which is a minor resistance, or at 139.85, which only gives you about a 20 pips move, right? So once it breaks this, then we can be pretty sure that if the price can move higher, which is 140.50, it's about another about 60-65 pips, right? So this is what you should be using, and this is how you use these are the ways which you can use our levels, to take trades. And we do have minor entries levels, meaning in the sense 139.65. Of course, I know that I'm bullish, right? I'm looking to buy. So 139.65, 139.85, 140.20, 140.50. These are the minor levels I pay attention to. And of course, 140.75. This is, we call it a U-turn zone, right? You have to pay attention to this level, because the price might find a major barrier whenever the price reaches this level, right? So these are the levels which you use it. So another way is, if let's assume that the price has moved to 140.50, right? I want to look for I want to stay with the trend. I want to go with the trend. So then this is the levels I use to pay to for re-entry, meaning in the sense 140.20 or 139.85, or the price even 139.65. The price, see, once the price moves above the resistance zone 1, chances are the price shouldn't go below this level. So this would be a major support for the day. And if you are bearish, once it breaks that support zone 1, 138.95, then the price would find a major resistance to break this level. So, and this is how use our report. And also one more thing to take note at is your previous resistance or support would become your previous resistance will become a support once the price tests that level again, and your previous support will become a resistance. That means if the price breaks down and moves higher, then your previous support would become as a resistance. So this is this is today's report, and this is how you use our report. And of course, we do have live trade signals that is of course meant for subscribers, right? So now let's look at the questions. And towards the end of the session, if there is any trading signal, then we would generate a trading signal. Because see, what happens is we only trade on the market, right? And we do not believe in trading on our emotions, right? So this is the thing you need to take note. Whenever the market is quiet, then we would also be sidelined because see, if you notice the net change from yesterday's close, which is US close, which you're talking about. In fact, most of the market has not moved beyond 30 pips. In fact, only the dollar yen, which is only about 26 pips move, and the rest all are pretty flat. So this kind of scenario, I suggest, it's best for you to stay sideline and watch the market, wait for the breakout to happen, then you start taking your trades. Okay, the questions. Okay, we are looking at, look at dollar CAN, right? Canadian dollars, 1 hour and 4 hour, right? So let's look at Canadian dollars. Okay, for those of you who are using 1 hour chart, okay, what I would suggest is, let me show you the chart. What I would suggest is try to use a 2 hour chart because 1 hour chart, because I've been in this business for almost like 15 years. Okay, chances are it might be pretty choppy. In fact, if you notice on that even this 2 hour chart, right? So in fact, it has been in the range trading for the last 2, 4, 6. This is the 8 hour, so it has been quite choppy, right? So this is the thing you, maybe it's best to use a 2 hour chart, right? So let's look at this instrument. Okay, in fact, if you notice, okay, I'm looking at from a daily chart, the price has risen from, I'm looking at an RSI, right? Wait, let me see whether you see that. Okay, RSI. So the price has, give me a minute. I think you're not able to see the RSI. Are you able to see the RSI? Okay, wait, I'll show you this, okay. So see, if you notice this on the daily chart, right? The price has risen. In fact, if you based on this, it is a bearish engulfing pattern which is happening. So what we expect, right? So on the daily wise, chances are it may have stopped, right? So if you notice here, it has been coming down. So what I would expect is, you see, in fact, it has been consolidating. Chances are, it might move lower, right? And of course, I would be very comfortable if the price has risen up, meaning in the sense towards that 106.65. Give me a minute. Yeah. So 106.65. So right now it is consolidating, right? So if you're conservative traders, then what I would suggest is, there's two things which you can look at, two ways. One is you can trade on the break. Okay, on the break of 105.75, right? 105.75 or even 105.55. But you should know that your downside is going to be pretty limited because we have you see here 105.55 is your previous support, right? So what I would be doing is, I would be only looking a very small profit because especially if you're conservative traders. But of course, if the price has risen up, then 106.65 would be a better bet because, based on the high, you can put a stop loss and you can expect the price to come down, right? So this is what we expect on this particular market. And even on the weekly chart, if you look on the weekly chart, okay, this is trading below the open. So as long as the price doesn't break 107, which is 107.25, I think the price should come down, right? Should come down. So this is our view on this particular instrument. Euro pound 1 hour chart and a 5 hour chart. Okay, again, Euro pound, if you notice, okay, let's start off by looking at a daily chart. So this daily has been it has been coming down, and in fact, the daily, what I feel is, chances are the low may have seen, right? So any buy on dips, meaning in the sense any retracement down should be a level to pick up. All right. So here, if you notice on that hourly chart, okay, let me see. Okay, if I'm looking at this particular instrument on the hourly chart, okay, okay, you're not able to see the chart. Okay, right. Okay, so here, what to support my statement? Okay, like as I told you, right, 86 is the level for me to say that that's going to be my benchmark. So I shouldn't see the price going below 86, right? So here, chances are, once the pullback comes in, okay, I prefer to long this instrument near 86.75, okay, unless 86.75, or let me see, yeah, 86.75 or even 86.40, right? So that would be a level to consider long. That means what I'm saying is another about 70 pips down, then you can go long and use this as your stop, because like as I told you, okay, chances are this may have bottom, but again it is too soon to conclude, because if this low holds, then it starts to break higher, then we can be pretty sure that the market has bottom. But right now, as it is 50-50. We have to wait for the market to give us the signal. So the 4-hour chart, I think, is the same similar scenario as the 2-hour chart, right? So it's the same again. So what I'm expecting is, I'm expecting the price to pull down. Okay, chances are, this 86.70, right? 86.70, 80 level should hold. That means another about 30-40 pips, and that level should be considered to go long on this instrument with that stop. Okay, the next question is, how much do you charge for your service? Okay, we have a website. Okay, this we in fact we are upgrading our website. Our new website is expected to be ready in 1 to 2 weeks time. Okay, of course there's a lot of surprises to look forward to, because on the new website and our current website, I think we have different services on different crosses. I suggest probably write to us, or you can go to the website. We will be very glad to assist you, right? Okay, or those zones like pivot points. Okay, in fact we don't use pivot points. Okay, to get these levels, okay, I'm quite well versed in Fibonacci numbers, Gann numbers, trend channels, Andrews pitchfork, you name it, right? So I'm quite well versed in all these tools, and of course I use this. In fact, if you are a technical analyst, you should know that how does the technical analysis work, because see, different groups, because you must understand that the majority, that means the market moves higher on demand, supply and demand, right? So you are following on majority of the crowd. So in fact, most of the crowds, they follow on different tools, or the tools which they believe. For example, like a moving average or trend channel, Fibonacci. So different tools will work nicely on different scenarios and different time frame, because different group is following that tool. So ours is special because we built in all these tools together in single. So chances are you may not go on the wrong, right? Okay, the next question is, because and another thing is the pivot points are very easy to calculate, right? And you do not need to have a special service on that. So that